Good morning, everyone. This is Brad Matheny. Today is the 26th of September. I'm getting the SPY cycle patterns up here. And congratulations to everyone. If you've been following my analysis and you have been preparing for this move into this rotation on the 25th, 26th, 27th, to the long side, remember I drew this about a week ago, indicating that we were going to be moving higher, in my opinion, and we are moving dramatically higher today. The QQQs, gold, silver, I mean, pretty much everything is higher, including Bitcoin. So it's going to be kind of a cherish the moment day, especially if you were positioned into calls or if you were positioned for gold buying into the recent lows and or silver and or the QQQs. I mean, everything is just kind of off to the races right now. So kind of hard to see here with my lines drawn on top, but spread it apart, drag it over. We are going to at least open probably in the 575 area on the SPY right now. So we have a very solid upward trend here, very solid breakaway move taking place. We are trending upward. This is a big crush pattern day. So come back over here. You can see we're in a crush pattern in trending mode. We're probably going to push up to, I would guess, somewhere up into this 577 area, maybe 578. It's going to be a pretty big day, in my opinion. Maybe even up into the 580. So we could be up in this area, which would mean this could continue a bit. So not going to give it too much weight, though. Let's just call it 580, 581 probably as a target right now. And very solid upward trending. I mean, we were concerned back over here. Remember, I told everyone to move away from cash or move to cash, get away from open positions in case we had that rollover. We had the Fed day. The following day, we had the breakaway with moderate volume, consolidated a bit on a breakaway day, a gapping, breaking bar. Then we consolidated, rolled, and I kept telling everyone that we were going to have some consolidation in the early portion of the week and then roll into a big breakaway phase on Wednesday, Thursday, Friday. And sure enough, yesterday, the technology earnings really kicked in. Micron, I believe it was. And we're going to see a nice solid rally here, guys. I think it's on its way up to 605. So we just got to see how it goes here. Let's come over and take a look at the QQQs. Qs are 493 in pre-market. Ladies and gentlemen, that's way up here. So we are now talking about an opening price in this area compared to down here. That is a huge 1.5% move to the upside. And we could continue because it is a crush pattern in trending, and we're getting some very solid follow through to the upside. I would suggest we're going to have a big, maybe 2.25% day, which of course, if you just take and measure from yesterday's close, 2.25 puts us at 496.72 roughly. So we've got a bit of a raise to go here and to the upside. And like I said, because of this crush pattern here, if we continue upward, it's going to be a good solid breakaway. Now, remember, we've still got this ultimate high up here at 503.25 on the Qs. That's going to become our next target. So we're getting closer, 493. We're only 7 points, call it 10 points off. We got a nice solid rally up to this area. We're going to run into some resistance. I do expect a rollover before the election, and I really do expect it to come from a news cycle. So I'll let you know that I'm sitting here kind of watching for some chaos, either, directed at Trump or directed at Kamala, with the idea that we're going to see some real, kind of like, Hillary Clinton with their server, or Trump with the fabricated Russian information. Anyway, I don't know, but it's going to come. I think it's going to come. I think it's fairly contentious. I'm kind of looking for that surprise, throw everything into chaos moment over the next 20, 30 days. So I think it'll come right around this time frame, about 2 weeks before the election, giving it enough time to really settle in, kind of disrupt things and shift. Now, again, by then, a lot of people have early voted, so it's already baked into the cake, so to say. But anyway, we shall see. If anything, we're going to get some volatility up in this area before we attempt to move higher. Remember, the SPY is already breaking away from that previous ultimate high. So we're in a very solid upward trend here, really moving up to that 605 area that I've been talking about for a while. And if you guys don't remember, kind of tout my own horn, I suggested SPY was going to be targeting 605 like 7 months ago. I'll have to go back and find it. But I said that we were going to get up into the 606, I think was the number I picked, and then 634. So look, guys, right over here, 634. That's my area right up here. So again, 8 months ago, I predicted these. And granted, we had the Kamala crush and the rollover, but boy, it would sure be wonderful to see it come up and hit my targets from like 8 months ago, back in April, I think it was February, April. It would be wonderful to see these targets just get tagged and be able to kind of rally in the success that I've had over the last year. I mean, and I'm happy all of you are following. I'm happy all of you are learning and paying attention. I mean, it's not about trading every day for me. It's about waiting for these moves like we're getting right here. Waiting for this setup and ignoring this chop. Basically, that's the move you want when it's the most efficient trade, when it's the most efficient opportunity for you to make money. I mean, you get just 2 or 3 of these nice moves a month, and you know what? You don't have to worry about it. You can go out and catch these things, maybe 4 a month, catch these nice little moves, make some money, and walk away. Wait for the next one. And that's what we're really trying to do here, is teach you when it's the most efficient time to trade. Okay, so now we're going to come over here to gold. And yeah, I get a lot of requests from everybody asking me to look at more symbols, but folks, it is 4:47 in the morning out here in California, and I am going to only do a few of these before I go get my breakfast and my coffee. Okay, gold up to 2704. We have now broken the 2700 level. Big move. Let me get my mouse out of the way, make sure that my candles are up. Big move up into this area. So now we have officially moved into the upper range for gold. Okay, 2704. Really, we got about maybe $10 up to 2714 or 15, and that is going to be, in my opinion, the upper range. That is a full 100% measured move. I didn't expect it to rally this quickly, but when the momentum's behind the move, it's tough to hold it down. Like I teach you guys, don't try to stand in front of a train when it's rallying. This is a big move in gold. I do expect it to roll into topping up over here. We've only got 1, 2, 3, 4, 5, 6, 7 more days of rolling potentially. We could get a little higher up in the 2740. I mentioned that earlier. I would be very cautious around 2715, 2725. Big move. I mean, huge. Look at gold is moving huge, $20 right now. And for those you never thought gold was going to get above, 21, 2200. Remember when we were so funny? We were back over here wondering what gold was going to do back in June at 2300. And there was a time before that when we're back over here. Remember, this is March, April, May. We're back down here at 1900, 2000, seeing if we're going to get above those previous highs back over here. And sure enough, we got into that breakaway phase and it's been nonstop. Really, gold has made a big move. You're talking about a 35% move, folks. Pretty much over from these lows back here. And remember, that's the 2023 lows. That's just last year, a year ago, not even a year ago. So from 1825 up to $2,800,000, it's about a 35% move, and it's not over yet. Okay, so I love it. I think this is a great move, and I'm happy to be able to share my research with you. It's all about helping traders and figuring out how to find the best opportunities. Okay, silver. Moving on to, and I like silver. I've got a lot of silver. Look at that. 33 bucks. There it is. There's the big breakout move. This is what everybody's been waiting for. Move above the ultimate high again. This is clear trending. If we can close up above this level, this is going to move us up into this upper channel, probably 34 to 35, giving us an upper channel here where we will consolidate. We will likely consolidate into this area. And then, like I said, guys, we're going to continue to move higher. So when you look at this move and you start looking at it from a Fibonacci structure, this is the 618 level. So we're going to go up roughly to 3480, which is where this area is. And then maybe 37. So I'll come back over here. And these are just common fib numbers. So somewhere over here, but that'll probably be after the election, coming up after the election. Now, ultimately, if you go back and look at any of my long-term gold and silver videos, this is the beginning of a 4 or 5 year run, guys, maybe even a little longer. So, you're talking about silver potentially up in the 130, 140, 150 area. Gold maybe up in the 9,500 to 13,500 area. This is the beginning of a very broad run. So remember, if you're a stacker like me, you kind of just have them stacked around waiting. If you're a trader and you want to catch these moves, going to be a lot of upward activity over the next 4, 5, 6 years for gold and silver. Okay, Bitcoin, big reversal here, likely on the news yesterday of the Micron earnings and the stronger earnings. I do believe, ultimately, I believe that Bitcoin is going to try to move higher. So let me tell you that. Ultimately, I think we're going to be back up here in the $73,000 area, by December, January, February of 2025, meaning December 2024, January and February 2025. But I do believe that Bitcoin is rolling into that consolidation phase. And I believe that it will consolidate, it will attempt to break, and it will attempt to rally into the end of the year after the election. In the meantime, I really do believe that Bitcoin is going to stay within this range. And right now, I'm expecting it to move downward into the 60,000, 61,000 area, rolling downward. So this is a bit of a recovery of yesterday's. We'll see how this holds up. If it holds up, everything is up. Japanese yen is up. German DAX is up. The FTSE is up a little. Dollars climbing. It's going to put a little. Really, we're going to see how this plays out into the end of the week. The big move here, like I said, is the recovery in the Nasdaq and the big move in metals. What that is telling you is that the markets are hedging risk factors which are being baked into perpetually lower rates. So that's one thing you're going to have to realize as we move into this next big rally phase over the next 3, 4, 5 years. It's going to be a lot. It's going to be driven a lot by central banks and expectations. But the rally, if the markets do double, as I predict, and continue to move higher into 2028, 29, 30, 31, you're going to be watching gold and silver reflect total risk factor globally. So, when you get right down to, and that's where Bitcoin may move up into the 130, 140 area. But when you come down here as a hedge, gold. In fact, let me come over here because I've got a silver chart. Gold is and silver are going to act as a hedge for total global risk. So you remember when we had the 2008 2009 collapse right here, this was the collapse in silver, the deep decline that happened right during the collapse, and then this was the rally that took place, reflecting risk that was on the table, of a U.S. centric event. So this was, let's call this, potentially 15 trillion. Hypothetically, it's probably more, but I'll just call it 15 to 30 trillion. Okay. Now we have a event that's coming up over here somewhere, 30s, that could be, including derivatives, could be 75 to 150 trillion. So where do you think that puts silver? And as I mentioned to you before, in my opinion, this is a big move, and this is just the beginning of potentially a move up into the 140, 150 area, reflecting the fact that we could have the markets, gold and silver, traditional hedge instruments, reflect total risk in excess of 100, 150 trillion dollars, including derivatives in global markets. So you've got a very big opportunity over the next 5, 6, 7 years. That's why I keep telling you, this is the greatest opportunity of your lifetime. I'm not going to lie to you. I'm going to give you straight up information. I'm wrong sometimes. I'm human. I don't get it right sometimes, but I am trying my best to teach you techniques and to see what I see underlying the markets. I will teach you to always protect your capital. I will teach you to wait for the best trade setups. I don't believe in trading every day and chasing things. Now, there's people that do that. That's fine. I mean, that's not my style. I have a life, I have a family, I have other things to just get in the way of day trading. But long and short of it, folks, we're living through the next 20 years are going to be the biggest opportunities of your life. And I think I'm showing you very cleanly that, if you go out and listen to all these people that are, out there, what I call the crash dummies, and the other people that are out there producing videos, the idea is to follow the momentum of money. Money goes and does its own thing. You can try to stand in front of a train and see if you can change its direction. I don't really recommend you do that. But you understand that you're going to get run over and you're going to get hurt and you're probably going to die. The long and short of it is you don't do that in trading. Try not to do that. Find out what's going on. Try to make the best educated decision you can. Wait for the biggest opportunities to set up and then try to pounce. We had a great opportunity over here in the SPY just last couple days. Yeah, look at all this. Look at all this I've been drawing over here. You know what that was? That was an educational video talking to you about the excess phase peak. So now, and Fibonacci price theory. Here we go. Here's our daily chart. Move this over here. We talked about this, how I was warning you to stay out of the market, get into a heavier cash position, 80, 85%. We waited through this move. I said, okay, we moved into a breakout trend. We need to see this confirm. We did confirm. I warned that Monday, Tuesday, Wednesday would probably be not a great day to trade of this week, simply because I said, look, we should look for lower lows, waiting for late Wednesday, Thursday, Friday to try to catch that move to the upside. And here we come right into early Thursday, and we're already up 3/4 of a point on news. So we're catching that big, beautiful move, kept you out of this sideways chop, waiting in cash, ready to pounce. And literally, you had 3, 4 days to pick your call options or your positions. And it could have been any decent call option at this point, over the last 3 or 4 days to give you the room, maybe a 10 or 11-day, option, something that's far enough out to give you some room for this move. But now you're going to catch the move. And now you're probably going to see 2, 3, 4 days of upward movement up into this 595 area that I keep talking about. And that, ladies and gentlemen, is what trading is all about. It's not about trying to be right all the time. It's trying to be right when it matters. Okay, when the opportunity is there and you can execute it. Okay, so here we go into Thursday. I'm going to be busy. I've got a coding project I've got to get going. Going to go make some more coffee. And like I said, I'll keep you guys updated a bit. But we are having a wonderful, let me go back to the SPY, a wonderful rally here in the SPY and in gold. I'm sure I'm going to hear from some of you. And silver, boy, look at this. 2708. It just keeps going up. That's fine. It's hedging. It's doing what it does. Gold is the hedge. I mean, look at the difference here between gold. So look at this. You see here this big rally since February all the way up, right? This is all of 2025. You can see this rally again, 35% rally in gold since February. And look at the same price move here for, let me see if I think it was February, and in Bitcoin. Now, granted, we have seen about a 30% move here in Bitcoin hedging, but you can see gold has really rallied over the last 6-7 months where Bitcoin has consolidated here. And we could get a good solid rally. Bitcoin does act as a hedge instrument. So be aware. Bitcoin, a lot of articles have talked about Bitcoin having a correlation to the NASDAQ. And I believe that's probably about 65% correct. But as a hedge instrument globally, a lot of younger people and other people, I mean, really just about everybody, believes Bitcoin is a proper hedge. Now, I put that as probably 75, 80% into metals, 20, 30% into Bitcoin as a hedge. I wouldn't bank on Bitcoin being an effective hedge in a major collapse. It may provide better protection overall than gold, but my money's going into gold because it is tangible, it is physical, and it has for thousands of years been a portable hedge against risk. So again, we'll see how this plays out. I'm not expecting any big crisis event until mid early 2030. So in the meantime, we're good to go. So happy Thursday, everyone. Let's go get some. And thanks for following along.